Hi everyone, welcome to Fin School. I am your friend Arkaprava. Starting today, we are diving on a series where we will discuss 15 stocks split across 3 portfolios curated by Mr. Saurabh Mukherjea. Consistent Compounder, Rising Giants and Little Champs are his 3 portfolios, and to kick off the series, we have chosen Asian Paints. Now let's take a closer look at the Asian Paints stock. It's interesting to note that it's currently hovering close to its 52-week low. What factors do you think are driving this, and will there be any turnaround of the same? We will delve into everything in our analysis today. So let's kickstart our analysis for the day. I will cover 3 key points in this video, keeping it short and snappy, straight to the point. First off, if you take a look at the price over the last 3 years, you will notice that it hasn't moved much. And here's an interesting detail. It's currently trading below its 200-day moving average. Now, what does this signify? Well, when a solid stock like this one trades under its 200 DMA, it typically suggests that it is an undervalued stock. Now, if you take a glance at the PE ratio, you will see it stands at 48. And if we look at the historical PE chart, we will notice an interesting trend. While the EPS is expanding, the PE ratio is contracting. What does this indicate? Well, it suggests that the stock might be undervalued at the moment. But how do we back this up? Let's look at some key figures. Over the past 3 years, the compounded sales growth has been a solid 18%, while the compounded profit growth has been even stronger at 20%. Interestingly, despite this growth, the stock price CAGR for last 3 years is only at 1%. But wait, there's more to unpack from this snippet. Take a look at the TTM figure, which stands at 3%. Now, if we compare this with its peer like Berger Pens, Nerolac, Akzo Nobel, we notice the similar trend of single-digit growth rate. It seems to be a broader industry pattern. Now let's shift our focus to Asian Paints for a moment. Their latest quarterly results reflect a similar narrative. Sales growth at 1% while profit have shrunk. This consistency across the board suggests a deeper industry-wide trend. It seems to be a broader industry pattern. It appears that the weaker consumer sentiment could be a driving force. That is why the growth in the sales number is not there in the last few quarters. Right now, the interest rates are at all-time high. But here's the thing, when the interest rates starts to come down, it tends to ease inflation, and guess what? That could indirectly lead to an uptick in the sales demand for Asian Paints and in the broader sector. Now for the second point, take a look at this graph. You will notice something interesting. The Asian Paint stock and the crude oil prices seems to move in opposite direction. What does this tells us? Well, it means that when crude oil prices rise, Asian Paints input costs go up too, and vice versa. So as the crude oil prices comes down, the company's margin tends to rise. And if you see this graph, you will notice it has started coming down. And guess what? That could trigger on increasing its stock price also. Now let's focus on what I believe is the most critical point putting pressure on the stock price. Birla Grasim entering the paints market. If you look at the overall market share at this moment, you will notice from the graph that Asian Paints holds a whopping 59% of the entire market, while Berger, Kansai Nerolac and Akzo Nobel hold 18, 15 and 7% respectively, with rest being other players. Now, if you read the headline of Grasim Industries press release, you will grasp the gravity of this announcement. They alone plan to add 40% of the current industry capacity, and it won't be too difficult for them, considering the main game in this paint industry is distribution. Ultratech is the largest cement company in India and is a subsidiary of Grasim. Now, just imagine if someone is purchasing cement and they also push for paints, that could be a game changer with this kind of distribution. I believe this is one of the major reason why this entire sector is under so much pressure. That's all I have to share for now. I hope you enjoyed this video and found it informative. If you did, please consider liking and subscribing my channel. Thank you for watching and have a good day.